I've seen estimates come out of the Bank of Greece and also from the government saying that your expectation is that the delivery of this fund could add up to 7 percentage points to Greek GDP over the next 6 years. That seems a little bit optimistic, particularly in light of Greece's own track record at actually implementing policy. What do you say to investors who are concerned about the execution?
Thank you very much for having me. Good morning, Jemana. Good morning, Juliana. It's a pleasure to be here. We are very excited. We submitted formally our Greece 2.0, our Recovery and Resilience Plan last evening. It tallies over 4,100 pages. That includes about 1,400 pages of an independent auditor who has verified each and every budget that we have submitted. It's a very rich plan. We're very excited about it. It includes things like using big data and artificial intelligence to fight tax evasion. We have digitizing archives of the Greek state, helping SMEs digitize. We have electric vehicles, charging stations, battery power. We have optic fiber for the islands, improving the electric interconnectivity of islands. We have upgrading energy efficiency of buildings, skilling and upskilling and reskilling the workforce, improving healthcare and education, accelerating the justice system, improving the ease of doing business in Greece, training against discrimination. The list just goes on and on and on. And we are very much of the belief that it will be a fundamental transformation of the Greek economy.
Well, it all sounds very promising. And of course, you have talked a lot about the participation of the private sector as well. I just want to take you back to the latest IMF report on Greece. And there they talk specifically about the banking sector and the fact that the banks entered into the pandemic with very low capital buffers and that there are still concerns about credit quality. There's no clear path to profitability. I just wonder how robust the Greek economy can actually be if you don't have a robust banking system as well.
Thank you very much for the question. Last week, we saw a pivotal and very important capital increase by Piraeus Bank, the largest lender in Greece, 1.4 billion euro. They originally asked for 1 billion. The demand was absolutely enormous. Institutional investors were actually, some of them disappointed because they didn't get the allocation that they wanted. We have new names investing in Greece that hadn't looked at Greece for a long period of time. And we should think of all of this as a paradigm shift. The banking system is transforming from a source of systemic risk to a vehicle to turbocharge growth, give out loans to the private sector. I should also add that the Greece 2.0 includes 13 billion of loans to the private sector to undertake investments. Our priorities are green, digital, exports, R&D, and economies of scale, and all of this will help out. And also last week, we had another upgrade, this time by the rating agency Standard & Poor's, second upgrade during a pandemic. They kept us also on a positive outlook. And of course, the big prize and our focus remains on achieving investment grade, and we think we'll be able to do it.
Looking at the 4 pillars that you've outlined in this Greece 2.0 proposal, it looks as though the majority of funds or the biggest part of the plan is going to go toward the green transition, looking at 10 billion in mobilized investment resources and about 6 billion from the Recovery and Resilience Fund. How exactly do you plan to use those funds, and how do you see this advancing the green agenda in Greece?
Green and digital are the top priorities of the plan, 37% green, 20% digital, and it includes a lot of stuff, both reforms and investments. The green revolution is a real revolution. It can include something as disparate as reforestation or protecting biodiversity. It could be strengthening civil protection. It could be helping our ancient sites withstand climate change. And then, of course, you have absolutely enormous investments in renewables, in upgrading energy efficiency, in creating a proper grid to allocate energy across the country, in introducing electric mobility everywhere, and of course, a lot of reforms to help streamline and fast track all these investments. So it's a real revolution.